I think till February we were in a good shape. Then as the further intensified discussion on trade policies and all happened, there is certain amount of uncertainty that set in with our customers. See, the good news for me is while there is uncertainty, there is some programs are being paused, some decisions have been delayed. We are not seeing major project cancellations touch wood. And this quarter still, like amidst all this, like we had one of the best order books also, almost 12.2 billion as a TCV that we have booked. So I'm as optimistic as I was in January, maybe not, but I'm not pessimistic either. I still believe like things would settle down in a short term, and customers' certainty will be there, and customers would start spending towards technology transformation. But that's my hope and expectation. Like I'm not giving confirmation that that's what's going to happen.
The street has been very nervous with respect to IT companies, and I think they've been the most hit in the last this quarter actually, especially the Q4. And though tariffs are not on services, it's a derivative that is, which is hitting the IT companies. When you speak to your client and they would have done the IT spend for the year at the beginning of the year, has the outlook changed on the IT spends as we speak?
As I said, there has not been major budget cuts or project cancellation. But it also varies, the mood has been different in different industries. For instance, if you take fortunately in the banking financial services, which is our biggest sector, so far demand has been quite resilient, and we continue to discuss newer projects, transformation engagements, application technology modernization initiatives. Those discussions are going on. It's the same as in, let's say, if you take the aerospace industry, aircraft industry, it's quite strong. But in the auto, there is a weakness. If you take consumer business, definitely there is a weakness because if the tariffs kick in a significant way, and the cost of goods will go up, and then they expect a reduction in the volume and maybe a profit. Similarly, we do find some of the airline companies expecting a reduced travel, and then they have issued some profit warning. So it's been a mixed bag. Some industries are not too concerned, or at least not taking any drastic steps. But industries like consumer are worried. So there has been a significant pause in project startup or delays. But again, even there also, we are not seeing any cancellations of projects.
Normally, I would have asked this as a first question on the earnings because it's Q4 numbers which is there. But, the top of the mind is the tariff. On the earnings front, earnings for Q4 were pretty much in line with street. They expected a slight dip in the revenue. Margins were supposed to be flat, but you came down by 30 bips there. Is the India business the sole reason why the revenues dip, because BSNL revenues would have come down for you? Definitely
India business had contributed to that. What we are quite happy about is all the major markets grew. I don't think in this year we had a situation where all three major markets grew, however small it may be, like they all grew. And even amongst our business verticals, non-India part of the business, BFSI grew. We had growth coming up in energy resources. We had growth coming in, even comms had a very marginal but positive growth. So overall, I would say the global business has shown a positive growth. India definitely, because it's not something that we did not expect. Like the project has come to a successful completion, which we are happy about.
Fully ramped down, or is there still some part of it?
There will be. I think there will be at least a couple of quarters of extended time.
Okay. On the BFSI part, how do you see BFSI? Because now we'll have to break it up, BFSI, how it's doing in the US and how it's doing in the Europe. and both are a different story to tell actually.
But actually, like at this time in BFSI, like when I speak to my clients or teams in North America or Europe, there is no major difference. Okay, BFSI or teams, I mean, particularly, see within BFSI also the way I would split is banking, financial services, and insurance. Insurance has shown some softness, particularly in North America, but banking, financial services has been quite resilient. We see projects right from cost optimization to technology, debt reduction, and of course new transformation project leveraging AI, Gen AI, and all those things. So BFSI has been quite resilient for us. Like even the order book in BFSI has been $4 billion in this quarter, which is probably one of the highest for them.
Out of 12.2.
Yes.
And is there a margin pressure which is coming in? Because in Q4, I was seeing, looking at your BFSI EBIT margins, they've been, I think, slightly down, I think 100 bips if I'm not wrong.
See, I won't be able to comment on the sectoral margins.
But is there an overall margin? Are clients negotiating hard on margins?
This quarter, like there are three components that while BSNL as it came down, it had provided a margin tailwind. We did have headwinds in terms of employee interventions, where between the entire year, if you look at, we promoted 1 in 6 of our employees, or close to 100,000 employees were promoted whole of FY25. So there was some impact of increments and interventions in Q4. We had some one-off non-employee related expenses in terms of marketing expense, some amount of CSR expense kicking in. So otherwise, I don't think there's any pricing pressure. Like realization actually in Q4 ticked up marginally. There was no reduction in realization.
Is that something to sustain in FY26 marketing spend because of the kind of hyper competition now is coming into play?
No, the marketing spend I'm talking about is more towards events that we conduct in Q4. It's more the seasonality of that. I don't think like we ramped up marketing in that sense. It's more like the seasonal, our annual conferences and.
So you had guided for 40,000 employees. You ended up hiring on 42,000, if I'm not wrong. How are you looking at FY26?
FY26, we are looking at very similar or maybe slightly higher than 40,000, like whatever we did. So, and we will continue to hire from the in the market as well.
And this attrition rate, which was 13% in December, now 13.3, is it anything to worry about?
No. See, that's a LTM. So LTM usually has a impact of base. So, but if I look at the we don't publish the quarterly annualized attrition, but that has actually significantly come down compared to previous quarter. So we are quite comfortable on the attrition rate.
You know, while this tariff has been pushed by 90 days, there is a pause which has come in. Europe is now reviving itself with respect to capex, with respect to more growth spending, fiscal spending. Let me put it this way. Is that going to be an advantage for companies like you?
No, definitely we are looking at participating in those spends. One other area that's interesting area that we keep hearing in Europe is establishing sovereign clouds in many of those countries, and or private clouds is another discussion that we have. So we do expect a revival of growth in Europe.